Hey, welcome back to Everyday Economics. The podcast helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics, a production of America's Talking Network. You can subscribe to all of our podcasts at americastalking.com. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We're recording this episode on Friday, September 20th, 2024, and joining me, as always, my friend, my colleague, the great one, Dr. O. Orphe Divounguy. You're a PhD economist. That puts you in an elite class, Dr. O.
I don't know, man. I don't know about that. Look, there's no such thing as an elite class.
Elite.
I don't know about
you
that.
You are elite.
No. Listen, I learned so much from you, Chris. I mean, in our conversations on the daily, like those conversations, those text messages, when you reach out at like 12:30 in the, around lunchtime, when you reach out in the middle of the night and you say, "Hey, have you checked out this article? What's going on in the U.S. economy?" And I'm like, I need to think, I need to prepare. So yeah, I learned so much from you, and you keep me sharp. So thank you.
You're a gentleman. Hey, your column at thecentersquare.com continues to grow in popularity. People are digging it. The feedback has been fantastic. I think it's one of the few places in American media today where you can get a look ahead at what's to come with enough perspective to make sense of why it matters. And I look forward to it. That's every Monday at thecentersquare.com.
And and honestly, like it's everyday economics. We just want to keep it everyday economic. We want to keep it honest, straightforward, no jargon.
Yeah.
We try to keep it real, and that's what it is. That's what it's all about.
So, I mean, the Fed fund rate decision of last week, I mean, is really going to pretty much dwarf everything that we have coming this week. But there's still some interesting stuff on the agenda.
Plus, we got a lot of data too this week. I mean,
there's data. Yeah, that's right.
That we didn't even talk about because the Fed just took up everything,
and that's unfortunately that's the way it works in the news business. Is you've got some, we can certainly talk about the news that we didn't get to spend time with, or that the Americans didn't have a chance to spend time with this past week. But let's start with what's to come next week. And this will be pretty short. I mean, there's not a whole lot that's coming that's earth-shattering.
Yeah. Let me tell you. First, you got that look in the rearview mirror, right?
Right on.
Second, GDP revision for Q2. Q2 GDP started lower. It keeps getting revised up.
Interesting.
It's interesting, right? We get upward revisions in GDP, downward revisions in employment.
Yes.
What does that tell you? Right? It tells you that the growth is coming from an increase in productivity growth.
Right.
Workers are getting more and more productive, more efficient. It's amazing. And we still don't know where it's coming from. Could it be the AI boost? Could it be what, right? Could it be that as the Fed tightened policy and interest rates went up, businesses got a little bit more, cautious and serious about the types of investments they were making. But the bottom line is productivity is on a tear in America today. And that's a beautiful thing. Productivity is responsible for the increase in living standards. And we're going places, man. It's beautiful to see. I don't think we've seen this strong productivity in a long time. So yeah, that's coming up next week. Then you got, this is a big one. Federal Reserve Governor Michelle Bowman is going to speak. And remember, she was the only one to dissent last week.
And she's going to talk on Tuesday. So
yeah, she's talking a few times.
I won't ask you to prognosticate what she might have to say, but do you have some sense of what her dissent was?
Well, the only thing I can tell you is that she was in favor of a 25 basis point rate cut, not 50.
Mm-hmm.
She's known for being a little bit, kind of hawkish most times.
Okay.
right? I don't think she sees it like everybody else. I honestly, I'm not very hawkish myself, but I kind of was in the 25 basis point camp, so I can't wait to hear
Yeah.
what she has to say.
Well, she's going to speak on Tuesday, and then she's also going to speak on Thursday with an entire array of the governors from the Federal
Yeah.
Reserve, and then Jerome Powell, the Fed chief, is going to speak on Thursday as well.
She's very serious about banking and finance, and she's
Yeah.
really always talking about, like, you know, capital buffers and
Right.
banking stuff, like, or even like she had a speech, I think, one time about like the fact that there weren't that many local banks anymore, and banks were like consolidating, and that was not a good thing. So, like, I mean, I like her. I like I can't wait to hear what she has to say. I found her too hawkish most times, but I think the gradual 25 was not a bad idea.
Yeah.
It wasn't going to break, like 25.50. Look, before the rate cut, markets were 55.45 on the probability, 45 on the probability of a 25 basis point rate cut.
Yeah.
It wasn't a big difference here. Plus, I think what really, by the way, if people were worried about the 10-year yield increasing, right, the long end of the curve increasing, guess what? Jerome Powell delivered that himself when he started talking about the fact that he didn't think the victory on inflation was won during the press conference. I was looking at my screen. The minute he said that, this 10-year spiked.
Yep.
I took a screenshot of it. It was unbelievable. So, like, he delivered like a more hawkish message during his press conference that basically sent the 10-year up. Look, they could have cut 25 basis points and basically signaled in the SEP and dot plot that the Fed funds rate was going to fall to 2.9% anyway, right? But they opted for 50. So I just, I'm curious. I haven't seen any. I don't know if she's done any interviews since then. But anyway, she speaks twice next week. Can't wait to see that. What else? Oh, Jay Powell's giving some remarks.
Right.
Yeah. That's going to be a good one. He's very dovish. I mean, he came out in Jackson Hole like, oh my God, the labor market. I'm worried about the labor market. So he's probably going to keep going with that. And then, but listen, you did look at every model. Every model predicted the policy rate to fall. Okay. But every model also tells you that when the policy rate starts to fall, disinflation stalls.
Yeah.
Right? Disinflation stalls, you get some upward pressure on inflation. So, like, let's think about that. I mean, I'm very familiar with all the models that are kind of like that the Fed uses, and all the macro models, and you look at the 3-equation New Keynesian model, you look at the 4-equation. I mean, like, all of them kind of behave very similarly. The sense that you cut, you output slows a little bit, the Fed funds rate, the Taylor rule prescribes the Fed funds rate to decrease a little bit. You get a little upward pressure on inflation, and so on and so forth. And so I guess, is output decreasing? Last time I checked, we're going to do GDP. Last time I checked, it kept getting revised up. We're looking at 3% growth. So yes, will it continue to slow? Yeah, I think it will. I mean, you'd have to sustain strong productivity growth to be able to keep it at that pace, but it will slow maybe a little bit, not a whole lot to justify big rate cuts.
So at the end of next week, we're going to get personal income and personal data spending, or personal spending data, PCE index. We're going to get core PCE
for August. This is getting interesting. This is getting very interesting, because you looked at everybody's like, things are slowing down. we got the July existing home sale. We got the August existing home sales
Yeah.
yesterday. And they were like, oh, existing home sales fell again. And everybody like, oh, the people are not coming back in the market. And I say, this is so wrong, guys. The reason why existing home sales fell again is because, well, first of all, what do these sales measure? They measure contracts signed back in June and July.
Yeah.
Before the big drop in mortgage rates.
Mm-hmm.
Right? So like, wait a little bit, right? We're going to get new home sales. I can, first of all, new home sales increased last month, right?
Mm-hmm.
We reported on that. Housing starts increased last month.
Mm-hmm.
Why? Because builder confidence also increased.
Yeah.
And builders are like, we're getting some more foot traffic. The share of builders cutting their prices went down. The share of builders offering incentives went down. The average price cut offered by builders went down.
Right.
What does that tell you? Those are signs that demand is coming back. And so retail sales surprising on the upside. So yeah, things might continue to slow, but they're not going to slow as fast. They're going to slow very, very, disinflation will slow and could potentially stall. Let's just be straight up about that, right? And I look at people who are like, and some people, very smart people, they look at the data and they're like, oh my God, recession is coming. The Fed has to cut a lot. Oh my gosh. And I'm thinking, guys, I mean, let's just look at the data. Sure, core PCE was running low in July, 1.9% on a 3-month annualized, right?
Mm-hmm.
Sure. But is it going in the right direction or the wrong direction? Core PCE looks to me like it's not moving lower.
Yeah.
Right. PCE might, headline inflation might be coming down, but core inflation doesn't look like it's heading lower.
Yeah.
Households are being supported by the easing inflation, headline inflation, real wages, real incomes, real wealth taken higher, supports the consumer, supports household spending. I got a ton of, what do you do when you got a ton of wealth and you strapped for cash? Well, you look to the bank and the bank gives you more money to spend. It's just the bottom line, right? And so, and of course, the labor market is still going. Look, it is going. The share of prime age individuals in a job is the highest it's been in 23 years. And that number keeps going up. It's slowing, but it's going up still. So, I mean, look, I think the recession angst, the doom and gloom prophets, wrong again. They're going to keep getting it wrong. The U.S. economy look, it's resilient. It surprised me. It surprised everyone. Do you remember when everybody was calling for a recession like 2 years ago?
Oh, yeah.
Or even last year?
Well, not everyone.
Yeah.
Yeah, I mean, although technically we did have a brief period of recession, right?
I don't know about that.
Yeah,
but look, the reality though is that all the people that were worried about recession back then, they're coming back around.
Yeah, they're not so worried about it now.
No, but some of them are worried about it again. They're like, look, it's slowing too fast. The Fed needs to intervene.
Yeah.
Good Lord, guys.
All right. We got to call it good there. I'll tell you what. Yeah. And I misspoke earlier.
Consumer sentiment's increasing.
Yeah.
I mean, what more do you want? This is a great economy, man. This economy is resilient.
Right.
This economy is outperforming all expectations by now.
Yeah.
So if you're gonna, you can't count the consumer out. You can't count the U.S. consumer out. You just can't.
Michelle Bowman's actually going to speak 3 times next week, and I just wanted to clarify the record.
And she's probably gonna, be very, bullish on the consumer, and knowing that, and she's probably gonna say, hey, I think a gradual decline in the Fed funds rate was probably more appropriate than starting off at 50 basis points and then promising another 50 before the end of the year. You mean to tell me they're going to cut 50? And some people are even saying they cut 50 at the next meeting and then 25 after. I'm like, what are you talking about? You
That's a
guys are
lot.
like,
That's
yeah,
a
I
lot.
mean, like, let's be real here, okay? Now, I could be wrong. If all of a sudden we see a contraction in the labor market in employment, you know, then I'll eat my words, you know, and I'll come on the show and I'll say, hey, I was wrong, you
Yeah.
know, and you know, but I don't know. I can't. Look. I don't want to brag here, but I can't remember the last time I was wrong on this show. It's been a while. So.
All right. All right. Well, I gotta hit your pause button now. We gotta call it good.
Right.
We gotta call it good. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other high quality podcasts at americastalking.com.